Dirty dealings, corporate battles, consumer woes. This is Evening 5. The Malaysian glove sector is poised for a strong rebound in demand this year, driven by inventory replenishment, increased US demand due to higher tariffs on Chinese gloves, and rising average selling prices. Kenanga Research, which remains overweight on the sector, is projecting a 12% rise in global demand to 368 billion pieces this year, alleviating oversupply concerns. It noted that there has been an uptick in orders over the past 3 quarters, while average selling prices have also been on the rise of late. It's that glove makers under its coverage are expecting average selling prices to rise by $1 to $2 per 1,000 pieces to $20 to $22. A $1 increase could boost earnings by 50 to 70%. Based on its estimates, the demand-supply situation will only start to head towards equilibrium in 2026, with demand returning to its organic growth of 9% and excess capacity significantly reduced to 72 billion pieces from 264 billion pieces in 2023. Its top picks are Hartalega Holdings, Supermax Corp and Kosan Rubber Industries. Body Beras Nasional or Bernas has given its assurance that the supply and pricing of imported white rice in Malaysia remains stable, with sufficient stock to meet the country's needs despite recent discussions surrounding potential imports from Pakistan, as the prices of the commodity here remain competitive and aligned with global market trends, and stressed that the country is not experiencing a rice supply crisis. Datuk Syed Abu Hussein Hafiz Syed Abdul Fasal, who chairs the National Action Council on Cost of Living Task Force Food Cluster, had said on January 1st that Putrajaya is considering importing white rice from Pakistan to address ongoing issues with supply and pricing. He said the proposal, which was submitted to Bernas, has received the approval of Prime Minister Datuk Sri Anwar Ibrahim but has yet to be finalised. In response, Bernas said no discussions have been held with the Council on the said proposal, and that Pakistan, alongside Thailand, Vietnam and India, has long been a key supplier of white rice. Istana Negara said prisoners seeking clemency or a reduction in their sentence must themselves submit an application to the Pardons Board for consideration. The prerogative of the Yang di-Pertuan Agong to grant pardons, reprieve and respite for offences committed is exercised with the advice of the board, which is chaired by the King. The palace clarified in a statement that if any party wishes to propose that a prisoner be granted clemency or a reduced sentence, the application must be submitted by the prisoner concerned before its next meeting. The statement did not refer to any specific prisoner or provide a timeline on when the next meeting will be held. This comes ahead of a bid by former PM-turned-convict Datuk Sri Najib Razak for a judicial review at the Court of Appeal next Monday regarding an alleged royal addendum issued by the former king that purportedly allowed him to serve the remainder of his sentence under house arrest. His supporters are planning to hold a rally outside the court complex to show their solidarity. HLIB Research has flagged a potential contract win for Southern Cable Group to supply cables to the national electric utility, with an anticipated announcement within the next 2 months. Shares of Southern Cable rose to a new record high, climbing nearly 5% to 6 cent to RM1.30. The research house said in an unrated note that with a significantly higher tender value this round, Southern Cable could secure a higher value long-term contract from Tenaga Nasional, thanks to its expanded capacity and the exit of a major cable supplier in Malaysia. It said it believes the group is well positioned to secure a larger contract. A surge in earnings has helped to nearly triple Southern Cable's stock price in 2024. Apex Securities, the only research house with regular coverage of Southern Cable, has a buy call with a target price of RM1.63 on the stock. Looking ahead, HLIB said the group's earnings growth trajectory remains strong, supported by a robust sales outlook in both the local and US markets. The upcoming plastic compound plant should also boost the company's margins. PNB's unit, Yayasan Pelaburan Bumiputra or YPB, has now taken over the 5.02% substantial stake that Yayasan Equity National or YEN held in offshore support vessel firm Icon Offshore via Ekuinas. This is because ownership of Ekuinas has now been placed under YPB, following the consolidation of Bumiputra-focused investment institutions into YPB, a move announced under Budget 2024 aimed at strengthening the development of Bumiputra businesses. The exercise also involved placing Pelaburan Hartanah, a unit of Yayasan Amanah Hartanah Bumiputra, under PNB. Hence, YEN is no longer a substantial shareholder of Icon Offshore, following its succession as a substantial shareholder in Ekuinas Capital, while YPB has become a substantial shareholder due to Ekuinas Capital being its wholly owned unit. Ekuinas Capital is Equinas' designated fund capital company, and its subsidiary Hallmark Odyssey owns 31.3 million shares, or a 5.02% stake in Icon Offshore. Icon Offshore's largest shareholder is Lim Han Weng, who holds a 56.67% stake. Lim is also Yinson Holdings' largest shareholder, with a 24.49% stake. Shares in Icon Offshore ended 1 cent or 1% higher at 1 ringgit 1 cent, valuing the group at 629.85 million ringgit.